Today on the show, I have the pleasure of chatting with Zamir Kazi. Now, Zamir started his career in real estate investing way back in 2013 after attending Florida State University, and he started buying and flipping duplexes. He formed a company originally called Berkshire Property Holdings in 2014, and then later rebranded that to ZMR Capital to acquire and redevelop multifamily properties across the Florida state. In the past 9 years, he has grown ZMR Capital to acquire over $1.5 billion. That's B with a billion. He's also been a recipient of the Globe Street 50 Under 40 and is an active investor and board member of multiple early stage startups. And he also contributes a significant amount of his time and resources to several different charities. So I'm really pumped and excited to have him on the show today to share his incredible wealth of knowledge and what he's built from scratch. Zamir, welcome to the show. How are you doing today, mate?
Great. Thanks for having me on, Reed. It's a pleasure.
My pleasure. And we were just talking a little bit in the green room before we press record. Where are you dialing in from? Because we actually live down the street from one another, but yet you're doing deals across the country. What's going on?
So I'm actually in Tampa right now. Our corporate headquarters is in Tampa. So I'm here visiting the office, and the great month of August. The weather is great in Florida this time of year. So we're here. I'll be back in Manhattan Beach, and hopefully we can grab a drink together soon. But we'll be back in great weather soon, hopefully.
Well, I want to get into how you've set up the company, because I think that might be an interesting thread to the conversation today. You went to uni in Florida. That makes sense. I've never met you before. We only just started talking, and you said that you live here in LA. So maybe give us a little bit of background on how that transition happened. Did you grow up in LA and then just went to uni out there and then built the company out there?
No, so I grew up in Orlando. I was basically born and raised in Kissimmee. A lot of people don't know where Kissimmee is, so I say Orlando. And then went to Florida State. I actually did not graduate college. I dropped out my last semester of my senior year. I did pre-med, as all Indian families require: doctor, lawyer, engineer. Those are my three options, and last semester I was like, I'm not doing this for another 10 years, and ended up working in a sales floor at a call center selling vacation packages, and started my own company doing that. Made some money, and my dad's like, look, you got to start investing in real estate for mailbox money, and so ended up buying my first duplex. That was $20,000 out of short sale. The renters were paying $300 on one side, $500 on the other, and didn't know anything about real estate. Joined Bigger Pockets, and then went on YouTube and learned how to renovate this thing myself. It took entirely way too long, but I made cabinets from scratch and fixed corners and walls and killed cockroaches. And I was like, man, this is fun. And fixed it up, sold it, and bought the one next door, and then continued doing so. Then I came to LA a few years after on vacation. I was a huge Los Angeles Lakers fan, and I was like, man, the weather's amazing here. I'm not going back. And so ended up moving, and haven't turned back. Love it. Been in LA for about 8 years now.
Love it. And so I take it you got two mobile phones, right? 181 days a year in the state of Florida, right? 181.
So that's why I'm doing my time right now in August, right?
That's awesome. But mate, rewind the clock and tell me how you made your first ever dollar as a kid here in the US.
Yeah. So, what's funny is I used to sell, I don't know if you know where Airheads are.
Yeah.
Yeah.
Is that the sour ones?
Yeah. So those are those are the warheads, but the Airheads are like the long, chewy candy.
Okay. Yep.
And I was probably kindergarten, 5 years old. I was selling those for 25 cents at school. Got in trouble. And like, you can't sell candy at school. So then my mom, I bought for my 6th birthday, I wanted a slushie machine. So my mama bought me a slushie machine, and our apartment was right next to a pool. So I would make slushies in the apartment and then walk outside and sell these for $1 to people at the pool. So I've been hustling since I was a kid.
Yeah, nice. And you are your parents move here from India? Your history is, your background is from, your heritage is from India originally, right?
Yeah, parents are born and raised in India. My mom was born in India but raised in London, and then but first generation American.
Awesome. And how was that growing up, being that kid from the immigrant family, trying to make a name for yourself here in the US?
It's tough, right? Because I feel like Indian families, a lot of Indian families want to stay very cultural, right? And don't really want to adopt, American culture, and kind of want to, you want to eat the same food and listen to the same music. And so, I was probably a little bit further away from Indian culture than most other people. So it was like more American than not, so it was a very interesting upbringing,
I could look, even for myself, I know being Australian, I love hanging out with other Aussies. I love talking the same banter, talking about cricket or meat pies or, very something quintessential Australian. So it is a human nature element to want to always gravitate back to some sort of heritage to feel like you belong somewhere, right? That's always, you feel like a fish out of water in a new country, and it's just you're trying to assimilate, and sometimes having those relationships with other folks from your home country just makes you feel a little bit closer to home when you're hundreds of thousands of miles away.
Yeah, I couldn't imagine leaving, my mom, dad, and, going across the world, right? And not knowing anyone. It's got to be just very challenging, right?
Right.
Yeah.
But now walk me through what you've built to date and how that, you mentioned earlier you were a sales guy, you got the bug by buying your first property for $20,000. How did you scale it to $1.5 billion?
Yeah, it's. I feel like it's been a 10-year overnight story, right? We've been working on this for a long time, maybe longer, and so we went from doing the duplexes, that was funded just by my own money, and then we started buying kind of larger deals, but it was, the next deal was a 40-unit deal, right? And that we brought in some friends and family money, but I didn't really grow up with friends or family that had money, so that money tapped out pretty quickly. Then we started, then we bought a 50 unit, sold it, and then bought a 100 unit, and then kind of started doing bigger and bigger deals. And when I got to LA, built a better network of people that I knew, and met some really good people, and surrounded myself with one of my friends was a private equity guy, and he's like, look, your returns are great, right? You should really start looking at bigger deals because you can raise some institutional capital, right? So, and really he was like, look, it's easier to raise 10 million than it is, $100,000 or a couple $1 million, if the deal's good. So, started finding some larger deals and used my cold calling background to called 1,000 people, and one hit is a $40 million deal in Atlanta. That was in 2018. And the one of the last of the three groups that I had yet to speak with finally stroked a $15 million check, and that was kind of the beginning of it. But really, I think the inflection point was after we purchased that deal. It was a pretty big. It was 500 units almost, and we needed an asset manager to come in and help us out. So we hired Colt, who was our first hire as asset manager, and they were coming off of he worked at a company that had 20,000 units, and all of a sudden the ownership decided that we don't want to be in real estate anymore, and they started to divest all of their holdings, and I was able to pretty much take 20 people from that company, right? It was just right place, right time, and essentially brought in institutional experience. We had a team. We went from having no one to 20 people. And that really was when we started to take off. And then, I'd say over the last 15 months, we purchased about 1.8 billion in deals. And from May last year, from January to May, we didn't buy one single deal. And then from May to December, we closed on 15 assets, right? And we probably did 10 this year.
The natural thing is, I'm an entrepreneur, I'm building a company as well, is how much of a a leap of faith was that, going and hiring 20 people? Because I'm sure you just didn't have 20 people's worth of salaries for the next 2 years, right? Like, you got to look at what's the incomings and what's the outgoings of just asset management fees, construction management fees. Like, how do you support all that, and knowing to take the bet that now looking back, you're like, that was a great bet. But at the time it would have been bloody scary because that's coming out of your pocket.
It was, and luckily, at the time, a lot of things kind of were going behind the scenes. We had just raised a $30 million GP facility, right? Before these guys even come on. And so there was kind of a feel, I obviously it was a huge bet on myself and what I thought we were going to be able to accomplish. But, we brought on some really strong acquisitions guys that had really great experience and relationships that, I was like, look, we're going to do, I had no idea we were going to do as many deals as we did, right? Like that was just kind of, I couldn't have imagined that. My plan was to do $1 billion over 4 years originally, and we did it within 12 months, it was really like 6 months. And so it was a huge leap of faith. And look, had it not worked out, it could have gone terribly wrong, right? So it was, but I always had this vision of, well, this is where I want the company to go. This is what I want to, I want to do more than where we were at. And it worked out, again, a lot of it was luck and timing and, but very fortunate to be where we are today.
And how quickly does it get to a point, I've observed yourself, I've observed Ashcroft Capital, Tides Equities, some guys that sort of all started around the 2013 mark and growing quickly. Is there any advice you can have to other people about making sure you don't grow too quickly and get too far out over your skis with just employees or overhead or just buying too many deals and all that sort of stuff?
Yeah, I think there definitely is such a thing as growing too quickly, right? And there are significant growing pains that come along with just the amount of volume we've done. And then the groups, the groups that you mentioned, I mean, Tides, they've grown at a crazy clip as well, right? just as fast in a short amount of time. And Ashcroft too, another great group of guys that. So, look, I think what we've tried to do is try to stay ahead of the growth, because the last thing you want to do is play catch up, right? So we've historically overhired, and it's worked out because we're anticipating the growth. Now you look at what's happened over the last 6 months, and things have all of a sudden slowed down, right? But again, we see kind of this is where we're going to go. Things will pick back up, and but I think you need to be prepared, right? And kind of be proactive versus reactive. And I think that's really been our saving grace is you don't want to play catch up when you're growing this fast, right? You want to have the systems in place. And then, because things can go wrong, right? You're managing a lot of money for a lot of people, and you want to make sure all the assets are performing well too. The portfolio performance also matters, not just acquiring deals, right?
100%. Is there anything in particular that, just besides hiring, that you would make a suggestion to people out there who are looking to maybe emulate what you've created?
I would say finding good opportunities is the most important part, right? Sure. And that's probably the hardest part of our business is things are hyper competitive, right? I would say the relationship part of this business is extremely critical and crucial. And I think just getting out there and meeting as many owners and brokers and, that's the key part, right? Because I truly believe that if you've got a really great opportunity and you're a good operator, right, the rest of the stuff will follow. Right.
No, you make money when you buy, but you can lose it pretty quickly through bad management, and that includes property and asset management. So, what's your thoughts on where the market's shifted? Obviously, you bought a ton of real estate in the last 6 months. How have you seen, the sort of the crystal ball, and where do you think we're headed right now?
It's funny because I think the shock of interest rates rising is I feel like it's starting to get over, right? And it's easy to underwrite where interest rates are going, right? Once you have that, I think things have slowed down, and most of the volatility has been around debt, right? So what I see is, the days of 80% leverage, the guys that are doing that, you're not doing that anymore, right? I think lower leverage is key. you want to probably go agency route. I think the fundamentals of the business are extremely strong, right? And you're still seeing great rent growth and good markets, right? The same markets that you're investing in, right? The sound demographics. Look, and I think in times like this, where interest rates are higher, homeownership becomes a little bit more unaffordable, right? Mortgages are going up. People are going to become renters, right? And or stay renters, right? So I think the industry it's a great hedge against inflation, right? So I feel good about where we're at. Look, cap rates have moved, right? I think where we were buying 3 caps, now there's 4s, right? So I think.
Do you think that's going to keep changing and keep going up? Do you think we're going to get a plateau at some point of that cap rate thing? And obviously that's tied to interest rates.
Yeah, so I think it's probably it'll settle at 4.5 to 5, depending on the markets and whatnot. I think you're already seeing Phoenix, Vegas, right? There are 4.5 already. Florida has been a little slow to follow. You're kind of low 4s right now, but I want to say everyone wants a 4.5 right now or better. And given where interest rates, where we see the curve going, I think that should be kind of where pricing ends up shaking out. Mm-hmm. Obviously, unless they decide to keep raising rates more, then that changes. But I feel good about that 4.5 to 5 range.
Right. And are you seeing any of the, as a buyer, what you underwrote maybe 6 months ago is now a little bit, what sort of delta have you seen in the price per pound adjustments with that cap rate now sort of expanding a little bit?
Yeah, so I'd say pricing's probably down 10 to 15% from where it was 6 months ago. Yeah.
Yep. Keep going.
Yeah, no. So we're seeing that as a buyer, but also as a seller. We've still been selling throughout these last few months, and I think it's probably fair to say that across the board.
Do you think there's any shift in a lot of people's thoughts about just flipping stuff these days, like in keeping it for a little bit longer term? Are you guys adjusting your models to hold for maybe the true 5 or 6 years rather than flip it in 2.5 to 3?
Yeah. So, that's a great question, because we've historically, we underwrite to a 5, right? Mm-hmm. And we never really have had to hold that long because the market's been, we're balanced with cap rate compression, and you're making your money, within a year. I think that's changed. So honestly, I think you're going to have to hold a little bit longer and actually execute on business plan. And I think, the shitty operators are going to not do well during this time. And the good operators will, you're going to have to, again, execute and do what you say you're going to do and probably hold, because I think interest rates will come back down, right? Mm-hmm. And
when do you think that will happen? If you gunned ahead, when do you think that's going to occur?
I'd say like Q1 of 24, probably. 24.
Okay, so you think another year of just staying a little higher.
Yeah.
And then, coming down. Yep.
Yeah, but and I think because of that, whatever we buy over the next 12 months is going to be great, right? Because caps have expanded, right? Mm-hmm. And if interest rates come back down, they'll compress again. So, I'm pretty bullish on, the next 12 to 18 months. I feel like it's a great buying opportunity.
No, I think, and also there's a lot of capital still sitting on the sidelines, particularly institutional. They're just like a little bit scared, as rightly so, right? It's unprecedented how we've gone from, I think, what the SOFR was sub 1%, and now we're up in the 2s, probably pushing up to 3 in a period of less than 6 months. That's obviously, it's going to scare a lot of people. But I think I'm seeing, at least as a buyer, if you've hung around the hoop for long enough, you're going to start seeing some rebounds, right? I'm starting to see the brokers calling me. Now, I'm nowhere near as big as what you've got to. I'm aspiring, but I'm still an active buyer. Now I'm starting to see those calls coming back, where probably the last 12 months, you've as a buyer, you've had to sort of really go out of your way to make an impression on the brokers, make them say, hey, I'm here to play. I'm not just blowing smoke, and I want to be a buyer. So that obviously backs into equity. So with that being said, are you seeing equity harder to raise with those bigger shops starting to take a pause a little bit now, given your strategy of how you raise equity?
It is. So I would say the the sentiment is starting to change a little bit right now, and there's more optimism. But I'd say for a good 4 or 5 months, everyone was pencils down, right? And some people say they're not, but they're window shopping and it's more pricing discovery to kind of keep their finger on the pulse. But there's definitely been a shift in thinking. I think, like you said, brokers are now, right? All of us, all buyers included, you're trying to woo the broker or the seller into saying, okay, hey, pick me, right? Now brokers are trying to get deals done, and my phone's never like brokers have never called me this much, right, to do deals. And so I think there's a lot of opportunity out there. There's more deals. Like we can actually pick and choose deals and be very selective, which I like, right, because there's not as much competition. But equity capitalizing those deals is hard right now. I think there's a sense of kind of like herd mentality, right, in the institutions. And everyone's sitting on the sidelines, and no one wants to catch the falling knife, right? Because they don't know where pricing is going to ultimately shake out. It's almost like the penguin complex, right? You got the one penguin that won't jump into the water because they think a shark's circling, but once one does, then they all go in after, right? Right. So yeah, it's been difficult, right? But not to say it's impossible. I think, again, if you're looking for good assets, good quality assets in good quality submarkets, it's still possible, right?
Let's pivot now a little bit to talking about your strategy of equity raising. I've come through the friends and family bootstrapping. You sound like you've pivoted really quickly to institutional. I've done a handful of I don't want to say institutional, more private equity shops where they're stroking one check. How do you navigate that for those people out there? You're either on one side of the coin or the other. Like you're pro institution and you just want to get it done, but you might get dragged over the coals from a fees point of view and splits, and then you got the capital raising, the sort of the crowdfunding where you've got to herd 150 cats into the boat, and but you maybe get a little bit better metrics on the back end. How have you balanced that too? And are you doing a mix of both, or do you just sort of sticking to the one side right now?
There's this grass is greener, right? I feel like from both sides, everyone thinks one side is better than what they're doing, and honestly, you're doing an amazing job with the capital raising side. I wish I could do it, right? Because if I could, I would. But look, I think the institutional side, like you said, there's pros and cons, right? I think the pros for us have been we've been able to scale, right, tremendously, right? Yep. And there's infinite amounts of money out there, right? Especially even today, all the big shops are raising their biggest funds ever, right? The funds get bigger and bigger and bigger. And now all the money's going away from hotel, hospitality, retail, all going into multi and industrial. So, again, it's going to start flowing back and it's great for, again, our industry. But so really what I'm starting to do is bring in a few friends alongside the institutional. So instead of doing a 90-10 deal or 95-5, we'll say, okay, give us another 5% allotment so we can go raise and start to build out that platform. I would like to have both buckets to raise on the syndication as well. Again, you better fees, right? Probably better splits, but we definitely want to keep doing institutional deals as well, and hopefully have both sides.
Yeah, no, I think there is a chicken and the egg scenario, particularly at least in my career. It's been you don't attract the PE firms until you've done a few reps. Yeah. Right, so you have to go build out the syndication side, and some folks like yourself, have just got right time, right place, probably connected with the right group, and it's just like it's an easy synergy and an easy yes. But I know, again, to your point, grass is always greener. Like I look at the other side and think, hey, what's over there? But I think in general, as any operator, if you're building the syndication business, and I'm saying syndication in general, multifamily business, you have to always look at the North Star, at least in my opinion, to keep growing your own book of investors outside of the PE firms, right? It's got to be you can't ever lose sight of that. But having a fine balance, because I couldn't go to $100 million deal with a syndication, right? Like you're only backing into certain size deals. Like I'm doing deals in the $25 to $40 million range because I know I can raise that much money. Now you're going to go to a $100 million deal. You're probably only going to go to a PE shop that can stroke a $20 or $25 million check. You can't, you're raising $25 million of equity from $50,000 investors at a time. It's a lot of bloody work. But that's where I think, it's horses for courses, understanding, right now I'm not even sniffing those bigger deals. You probably are. And that's where you said before, is that scale is such a importance, and where does that fit in your business goals of where you want to go? So yeah. Tell me a little bit, pivoting now as we come towards the end of the show, you a bunch of charities, you're doing a bunch of work, you're giving back. First question is, what's the goal for the biz over the next sort of 10 years? And then what are you wanting to do as you're giving back to the community, and what projects you're involved in?
Yeah. So, 10 years it's a long time out, but my short-term goal is to get to 20,000 units here pretty quickly. The plan was, end of next year. We'll see if that happens. And we want to get into development. So, hopefully over the next 10 years, 50% is acquisitions, 50% is development. And we're starting to do some build to rent projects too. So, just venturing out a little bit from the acquisition side. We've thought about bringing management in house. It's something that I still struggle with, and it's a dilemma that probably won't solve anytime soon. We're just focused on building the best shop possible for us, and continue to provide outsized returns to our investors and find good opportunities. We're all deal junkies. We just love doing deals, and just continue finding the next good one, and in terms of community outreach and kind of charities and stuff, every deal we close, we donate to a charity of either our choosing or the seller's choosing, and we personally kind of do stuff with homeless charities and children's, orphan charities and whatnot. We run a basketball training facility where I'm from, in Kissimmee. And that's another thing that we like to provide and give back to the kids. Growing up, it's expensive, and to kind of give back to the less fortunate and kind of, provide them with 5-star facilities and stuff for free. And, so I played basketball growing up. So it was just something I love to do. And it's a fun pet project.
Are you building that, or just going renting the space and letting guys come along?
We build it.
Oh, wow. Yeah, that's awesome.
Yeah.
That's great.
So we're gonna build out a couple more now. So we have a paid program where people pay us, and then we have the charity side of it too, where we offer free services. So, but it's caught on. It's caught on, and people love it. The cities love it. So
that's great.
We'd like to do more of that.
Awesome stuff, man. Well, look, at the end of every show, we'll love to dive into the top 5 investing tips. You ready to get into it?
Yeah.
Mate, question number 1 is, what's the daily habit you practice to keep on track towards your goals?
So I keep a written list of my goals. And I'm kind of OCD about just scratching things off. So if it's on a list for me, I make it a point to get it off that list. But I used to keep, and I still do, my phone screensaver is my big, hairy, audacious goal. Mm-hmm. And, we look at our phones 100 times a day, probably, right? Mm-hmm. So I'm seeing this 100 times a day. And, more often than not, I've achieved those goals. It may take 5 years, may take 10 years, but it's top of mind.
That's awesome. Question number 2 is, who's the most influential person in your career to date?
That's a good question. So honestly, it was a friend of mine who actually just passed away in October. Heart attack, young guy. But one of my best friends was like my brother, and he was actually the guy that was in the private equity world. And he helped me think bigger, right? And start, kind of reaching out to those institutional groups and making connections, and help me kind of build the business. And this is what I had to have in place. And was a best friend, brother, and mentor.
I'm so sorry to hear that, mate. It's life loss like that can really put things into perspective about what you're trying to achieve. Question number 3 is, what's the most influential tool in your business? When I say tool, it could be a journal or a phone that you can't run the business out, or it could be a piece of software that just the business won't exist without that tool.
Email, right? I guess.
I hear Slack going off in the background earlier.
Actually, Slack's. So we were mostly working remote, and most of our team was like, "What is Slack? I don't want to get on this." And now we use it. It's like it is the Bible for us, where all communication goes on Slack. Obviously, your phone. You probably can't do anything these days without your phone, right? That probably might be the most important tool. If I didn't have it, I wouldn't know what to do. But yeah, I think Slack, email, phone.
Cool. Awesome stuff, man. Question number 4 is, in one sentence, what's been the biggest failure in your career? What did you learn from that failure?
That is a good one. I guess it's not a failure, but this might be kind of, to your point, growing quickly, and the world kind of changed overnight a few months ago, and we had, $5 million hard money on deposits, right? And we actually ended up having to walk away. We closed most of those deals, but some of the sellers weren't willing to adjust to get it at the price to where we needed, and we had to end up walking probably from about $2.5 million of deposits.
Wow,
there's a lot of money, again, it was at one point we had 9 deals under contract at any time. So, this was bound to happen, but it was one of those things where you run so fast and something like this changes, you can kind of get stuck out there. So that was a big, this mentally getting over the fact of, we've been doing so well, we had to, and then having to walk away from that amount of money, it was hard. Right.
Right.
But look, we are where we are at this point, and we've moved on, and we're back to getting deals done again. So
what are you doing differently now? Like, just as a segue from that?
I think times are a little bit different now. So whereas before, like we were talking about, it was, you weren't getting a deal unless you had hard money. It was just it was normal practice, right? That was just the way of the world. Now, I think because of the volatility, you don't need to put up hard money anymore. We're not doing it, right? And I think everyone's okay with that, given where we are with financing and all that. I think going into deals knowing if we have partners ready to go,
right?
Versus just kind of, again, it's been on fire, and you usually know if you got a good deal. It's not easy, but you should be able to find a capital partner, right? Now we're probably a little bit more proactive on the front end before even doing that. Shopping
around, making sure you've got those soft commits. Yeah, exactly. I think that's even on the syndication side. Like, I'm not taking down a deal until I'm really confident on that equity piece. Yeah. And this current deal we're raising for right now, it's like we are going in parallel. Like, you're raising equity as your DD is going, as you're negotiating the PSA, and then usually by the end of DD, you're freaking 99% confident you're going to get it raised. Right. And that helps you for success because, again, it's a little different from a private equity shop, but I've been there in the past where you get to end of DD, 50% raised, and you're like, geez, where the rest is coming from? It becomes a little bit, it's gray hairs.
It's stressful for sure, right? It's like, the same, it's almost like every deal we did over the last 18 months, it comes down to one partner, right? Like, and then you're like, man, if that one partner didn't show up, what would we have done?
Right.
That's right. Definitely it's scary and stressful, but
you're flying close to the sun at that point. And,
absolutely.
Well, mate, last question is, where can people reach you to continue the conversation? They want to be in your sphere. Where do they go?
So my LinkedIn, or Instagram, I'm on Zamir Kazi, and LinkedIn is Zamir Kazi as well.
Awesome.
Or our website, ZMRcapital.com.
ZMRcapital.com. Awesome stuff. Well, I want to thank you so much for jumping on today's show. I want to reflect some of the things that I took away from today. I think your ability to scale really quickly, but also keeping humble in what you're trying to do and what you're trying to achieve. And it sounds like you've had some great opportunities that have come your way, like the employment of those 20 people. That really was a pivotal change in your business. And I think that from my perspective, at least, it's understanding and taking the guts to go off and say yes to that opportunity, because so many entrepreneurs with limited capital or just, too afraid to grow quickly would have said no. They would say, I don't know if I can take on 20 people. I don't know what the HR problems, like there's all these things that go through as a leader, and you sort of kept very defiant on that goal, and it's obviously worked out really well for you. But it sounds like there's been some growing pains along the way, and it's obviously shaped you as a better entrepreneur, a better multifamily buyer, and a better leader at the end of the day. So, did I leave anything out there?
No, you did great. Thanks so much for having me on, man. This was a lot of fun.
Awesome, brother. We'll chat soon. Enjoy the rest of your week, and have a great weekend.
All right, man. You too.
Well, there you have another cracking episode jam-packed with some incredible advice from Zamir. Remember, check out Zamir Kazi on LinkedIn and Instagram, and it's zmrcapital.com, or just press ZMR Capital in the Google search and it'll easily come up. I want to thank you all again for taking some time out of your day to tune in to continue to grow your financial IQ, because that's what we're all about here on this show. If you do like this show, the easiest way to give back is to give it a 5-star review on iTunes. And we're going to do this all again next week. So remember, be bold, be brave, and go give life crack.